you can still grab SOFI Technologies stock at a more than reasonable price. SOFI Technologies reported strong results in its latest quarterly earnings release. Even so, this sparked just a modest rally for the fintech neobank shares. While frustrating for existing investors, this is actually advantageous if you're looking to add to a long-term position in SOFI Technologies stock. Let's dive in. Here's why you should take advantage of the post-earnings rally in SOFI Technologies stock. Welcome to Timely Investment Research. In my last video on SOFI Technologies stock, I discussed renewed bullishness following the release of the fintech neobank's latest fiscal results on October 30th. So far, a round of post-earnings bullishness has taken shape, albeit moderately. On October 31st, the first trading day after third quarter results hit the street, shares rallied by around 8.79%. While a solid jump, especially during this earnings season, where stocks have tanked on negative results, yet have barely budged on positive results. Some might this to be a bit of a disappointment. SOFI Technologies has a history of making even larger post-earnings price moves, such as the stock's big jump after SOFI's last quarterly earnings release in July. Still, there is a silver lining. If you've been looking to add to an existing position, this reaction is quite advantageous. Here's why. SOFI Technologies stock earnings reaction. In its October 30th earnings release, SOFI Technologies reported another quarter of solid revenue growth, 27%. SOFI's top-line figure also came in ahead of expectations. Although generally accepted accounting principles losses were wider than expected on an adjusted earnings basis, SOFI's bottom line topped the sell-side's forecasts. Alongside these financials, SOFI also reported solidly in terms of other key performance indicators, like the number of members on its platform. Now 6.9 million strong, membership increased by 717,000 and was up 47% year-over-year. And CEO Anthony Noto's reiteration of the company's expectation of hitting positive generally accepted accounting principles earnings during this quarter, and it's clear why the market reacted only slightly favorably to these results. Things continue to move in the right direction, but there's plenty that's leading some investors to maintain a show-me stance about SOFI Technologies stock. Strong growth notwithstanding, in the current market environment, revenue growth alone doesn't cut it. This fintech needs to hit profitability, and fast. Despite Noto's reiteration of next quarter's earnings guidance, it will likely take the actual reporting of positive earnings to shift sentiment for shares. While frustrating for those approaching SOFI Technologies as a near-term trade, this is fine for more patient investors. Irrespective of near-term performance, time is on your side. With quarterly earnings out of the way, it's unclear as to how SOFI stock will perform between now and the next quarterly earnings release next January. There are some factors that may help give shares a further modest boost. For instance, another big takeaway from SOFI's aforementioned earnings release was the strong performance of the company's non-lending segments, such as its Galileo fintech unit. Morgan Stanley's analyst team cited this as a reason for its post-earnings upgrade of SOFI. Greater appreciation of Galileo's performance may help to shake off the perception among some that SOFI is solely a bank stock. This suggests greater upside potential when the company becomes profitable, as non-bank fintechs trade at richer multiples than bank stocks. Then again, while not for certain, it's also possible that the market quickly digests the latest results and shares simply move in tandem with the broad market. Again, though, this is not a reason to be discouraged. Instead, think of it as time being on your side. SOFI could resume trading sideways over the next 3 months, providing the opportunity to scoop up additional exposure at what is a more than reasonable price between $7.50 and $8 per share. Bottom line, you haven't missed the boat. Why do I believe current price levels are more than reasonable? As I've mentioned before, while SOFI may appear pricey compared to its present results, in hindsight today's prices may appear to be a bargain. Assuming SOFI hits generally accepted accounting principles profitability this quarter, incremental generally accepted accounting principles earnings growth in subsequent quarters could be massive, based upon this firm's level of operating leverage. Don't forget, either, that Noto is setting his sights high. Rather than aiming to scale up SOFI to the size of a mid-sized bank, the CEO is looking to turn SOFI into a financial institution on par with leading U.S. banks like Bank of America. With the latest results strengthening the bull case while shares move only moderately higher, the opportunity to grab a long-term position in SOFI stock hasn't gone away. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, Hit that bell icon to never miss an upload, and hey, don't forget to subscribe.